Hey everyone, Coach Investor back to another video for you today. So my last video on Alibaba was pretty well received. I think most of you liked it. So I'm doing a little update on them. We're going to discuss a bit about their earnings report, the recent scandal that came out of China. You're going to see it right now. So Alibaba fires manager accused of sexual assault. So again, this company keeps on getting many blows from many directions, but at least this time it's not about the government, it's not about some tech crackdown or something, it's about something more personal, and that's a sexual assault case, maybe a bit like what we've seen with Activision Blizzard, but Alibaba, Chinese company, Chinese government take this very seriously, so directly the guy is fired. Now the stock did drop, I think 1% or so yesterday, so not such a big deal in the grand scheme of things. Now we're going to have a look at their earnings report, which in my eyes again was pretty good. Yes, they did miss on the revenue estimates, a bit like Amazon, but everything else shows that Alibaba is still growing and will become bigger and bigger each and every year. Now before I jump into that, I just want to thank today's sponsor, The Motley Fool. And again, these are my views and my views only. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me find the latest growth stock and innovative company. And right now I have a discount for one of my favorite services, the Fool offers. Through the Motley Fool's stock advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock advisors' average stock picks have returned over 500%. If growing your money is something you'd like to do more this year, you can visit www.fool.com/couchinvestor or click on the link below for access to my special offer and decide if Stock Advisor is right for you. Now let's dive into this. Alright, just a quick little announcement. Most of you know, maybe you don't, but I launched a Substack, I think a week or 2 ago. It's free, so you can sign up. Link will be down in the pinned comment. It's a free Substack newsletter you will get each Saturday during the earnings season that will cover most of the big companies that reported earnings. Each Saturday you will get that in your mail. Last week we covered Alibaba, Corsair, Activision, basically every big company. You can find the full report linked under each company, or you can just read the summary and then the graph of what happened that week. So let's go over Alibaba's number here. We're going to jump into the official one in just a bit. So earnings per share of $2.57 versus an estimated 2.24, so a beat on that. But in revenue, they missed just a little bit, $31.8 billion versus an estimated $32.54 billion. It's still up 34% year over year. Now their commerce segment was up 35% to $27.9 billion. International commerce retail, so AliExpress for example, up 54% to $1.7 billion. Cainiao, I don't know if I'm pronouncing this correctly, is up 50% to $1.8 billion. Their cloud revenue, I was expecting maybe a bit more of growth on that front, up 29% to $2.48 billion. Obviously the cloud revenue, the cloud segment for Alibaba is supposed to be a bit of the same like Amazon's web services, for example. Now the annual active customers across the whole Alibaba ecosystem reach 1.18 billion. That's including the 912 million customers in China. So as you can see, a huge customer base. Now the last couple of things, the annual active customers for Taobao deals grew to over 190 million. Lazada's orders growth up to 90%. Taobao grocery and Freshippo have seen 200% quarter-over-quarter GMV growth. And lastly, the board authorized upsized share repurchase program from $10 billion to $15 billion. So in a way, they are trying to reward their investors by obviously rebuying their own shares, which will obviously make your shares more valuable. Right now, a couple of quick notes from the actual earnings report. So first up, we have a quote here from Daniel Zhang, the chairman and CEO of Alibaba. So he says here, "We believe in the growth of the Chinese economy and long-term value creation of Alibaba, and we will continue to strengthen our technology advantage in improving the customer experience and helping our enterprise customers to accomplish successful digital transformations." Now you have to take into consideration, obviously, that China's crackdown on tech companies might continue for a long time. But it doesn't stop here. We have another quote from their CFO. So we delivered strong revenue growth of 34% year over year. As we said in the last quarter's results announcement, we are investing our excess profits and additional capital to support our merchants and invest in strategic areas to better serve customers and penetrate into new addressable markets. Now it goes without saying that Alibaba, Tencent, all those huge companies in China are still highly regarded by the Chinese government. Yes, they are getting some punches left and right each and every week, but they're still one of China's big pride out there. Alibaba, one of the biggest companies in the world. Obviously, China would like them to keep growing. So it makes sense for Alibaba to continue to invest in their own business, create more opportunities for them, but as well for their customers. Now, remember when I said before that I thought the cloud segment would grow much more. So there is a little bit of an explanation here. So they say here that year-on-year revenue growth began to moderate since the last quarter, primarily because of revenue decline from a top cloud customer in the internet industry that has stopped using our overseas cloud services with respect to their international business due to non-product related requirements. So might be political. Going forward, we believe that our cloud computing revenue will be further diversified across customers and industries. This is obviously something that everyone should keep in mind if you invest in Chinese companies or if you invest in, let's say, American companies or Western companies that have big Chinese clients. We've seen this with Fastly when there was this whole TikTok fiasco. So the same thing happened here, just the other way around. A customer that probably is not a Chinese customer has to stop using Alibaba's cloud services because of maybe some political risk. I might be wrong because we don't have more information on that, but if it's not because of the product, it has to be because of something else. With everything going on there, it might be political. But overall, I still believe Alibaba is a great company, a great business. Zang is a great CEO, but it's a Chinese company, so there's always risk attached to that. There might be a lot of value with Chinese stocks right now because they are cheap valuation-wise, but there is still risk of it being a Chinese company. Also, you will not own the shares directly because of the weird structure that they are using. So keep all of that in mind. I'm neutral on this. Do not own any Alibaba shares or indirectly own any. So just so you know, I don't hate on anyone that owns Chinese stock. I don't hate on anyone that does not own any Chinese stock. Just wanted to make that clear. And that will be it for this video. Let me know down in the comments below if you have any Chinese stocks, if you own Alibaba. Let me know down in the comments below. And if you like this video, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. As always, guys, take care, stay safe, and see you all in the next video. Bye bye.